Welcome to the Deep Dive, your shortcut through all the noise. Today, we are definitely strapping in for a look at the biotechnology sector. High octane doesn't even begin to cover it sometimes.
Yeah, it really runs on, well, hope, clinical trials, and just enormous amounts of capital.
Exactly. And we're seeing that play out with the three high-volume stocks we're diving into today. These are all trading above $10 as of November 10th, 2025. It's where market mechanics meet these huge scientific potential breakthroughs. Okay, let's unpack these sources.
Right, so our mission today is to look at these top three volume leaders, that's Galecto, Cogent Biosciences, and Roivant Sciences, and really try to understand the sheer speed of clinical news and corporate action.
We're not just looking at the numbers then.
No, not just numbers. We're kind of dissecting the anatomy of these market shockwaves. For each one, we'll dig into the catalyst, what kicked it off, their basic financial health, the technical picture after the surge, and then we'll do a little fun hypothetical $5,000 paper money investment calculation.
Ah, okay. Just to sort of quantify the profit impact of the day's move.
Exactly. It helps visualize the risk and reward.
It's a great way to see that high-risk, high-reward nature of biotech, for sure. We can use that simulation math as a kind of yardstick for these wild swings.
Okay, but before we dive in, we absolutely have to state clearly, this analysis is purely from the sources provided. It's for educational and journalistic purposes only.
Right.
We're just reporting on the market data and what happened. This is definitely not investment advice, and it's not a suggestion to buy or sell anything. Okay.
Got it. Disclaimer stated. So let's kick off with the one that blew the doors off the market today. Galecto Inc., ticker GLTO.
Yeah, that one was something else.
Right. It's a tiny operation, really. Microcap, $22.90 million market cap. And just 5 listed employees.
Just 5. Very small.
And yet this tiny company completely dominates the headlines today, a daily change of plus. Get this, 248.48%. On insane volume, too, over 40 million shares. The price jumped from $4.95 yesterday, close to $17.25 today. I mean, that kind of move just seems inherently unstable.
It is unstable, absolutely. But, it shows that instant validation you get from corporate action. The catalyst was confirmed this morning, 7:40 a.m. Eastern. Galecto announced it's acquiring Damora Therapeutics.
Ah, M&A. For these little biotechs, that can just change everything overnight, right? Regardless of current sales.
Precisely. It redefines the future potential instantly.
Okay, so that brings us to the fundamentals, which seem paradoxical. How does a company with literally no reported sales, the price to sales is just a dash and losing almost $16 million net income, how does that justify a nearly 250% jump? Feels totally disconnected from normal business performance.
Well, what's fascinating is the market is ignoring those traditional metrics. You're right, but it's laser focused on one thing, liquidity, cash. See, clinical stage biotechs, they run on cash, not revenue, until a drug gets approved.
Yeah.
And GLTO, surprisingly, looks strong there. Their quick ratio, current ratio, both 3.73. That signals pretty solid short-term financial health. And crucially, they have $5.73 in cash per share. Plus, the debt to equity is low, 0.21. So this cash position, it suggests they have the runway, the time needed to absorb this acquisition and push the combined pipeline forward.
So the market's basically betting on the cash and the potential science, ignoring the current lack of profit.
That's the bet. Yeah.
So cash is the key fundamental here. Now, technically, a 248% jump must look like a rocket launch on the charts.
It looks like complete detachment from history, basically. The relative volume is just extreme, 16.38. That means trading interest today was over 16 times the average.
16 times.
Yeah, and the price, it's now sitting 302.93% above its 200-day moving average.
Whoa.
That number just screams that the price is violently broken away from any prior stability. It's purely news-driven. Now, the RSI, the Relative Strength Index, it's at 72.43. High, yes, but maybe not quite into that immediate, unsustainable, overbought territory above 80 yet.
Okay, let's try to quantify that velocity with our paper money simulation. Say you put a hypothetical $5,000 into GLTO at yesterday's close, $4.95. How'd that work out?
Right, so $5,000 at $4.95, that would have gotten you approximately 1,010 shares. Total paper investment just under $5,000, $4,999.50.
And holding those 1,010 shares until today's close at $17.25?
That same position would suddenly be valued at $17,422.50.
Wow.
So the estimated profit mirroring that daily gain perfectly is $12,423. On paper, of course.
$12,000 profit on a $5,000 bet in one day. That's the small cap biotech gamble right there, driven by M&A.
Exactly. High risk, high reward defined.
Okay, that volatility really highlights the explosive nature, the risk-reward of that microcap space. But let's see what happens when a clinical breakthrough hits a much bigger company. Cogent Biosciences, COGT.
Right, different kind of catalyst here.
Yeah, this one's a solid mid-cap, market cap $4.53 billion, trading around $32.46.
COGT had the second highest volume today, and a slightly less crazy but still huge daily surge of plus 119.03%.
And this is your classic, almost textbook biotech move. It's driven by phase 3 trial success. The sources confirm at 7 a.m. Eastern this morning, positive results from the Bezuclastinib PEAK Phase 3 trial.
Bezuclastinib.
Okay. Yeah, they were testing it specifically for GST, gastrointestinal stromal tumors.
Yeah.
When you get positive phase 3 data, especially for a significant target like GST, the market just doesn't wait. It reacts instantly.
And the analysts jumped right on it too, I see.
They did, immediately. 2 aggressive upgrades today. Wedbush bumps them to outperform, target $38. Stifel moves to buy, target $40. The market is basically pricing in a high chance of future approval and sales. So the future potential gets instantly revalued. But what about the present? Did the financials actually support a $4.5 billion valuation today?
Fundamentally, no, not yet. Like GLTO, they're operating deep in the red. A huge net income loss, reported at minus $281.86 million.
Oof.
Yeah, so the entire current value is really tied up in that anticipated success. However, their balance sheet looks exceptional, even stronger than GLTO's, actually.
LA, okay.
Current and quick ratios are sitting at 6.38. That's excellent liquidity, very stable financially, and again, virtually no debt equity at 0.2 us. This suggests they are fully financed to continue down that path toward getting the drug to market.
Okay, makes sense. They have the cash to see it through. Now, technically, even if the news is great, a 119% jump. That has to raise some technical warning flags, right?
Oh, absolutely. This was an ultra-extreme breakout. The stock closed almost 90% above its old 52-week high of $17.50. That's a massive clean break.
90% above the old high.
Yep. But here's the technical warning sign you absolutely have to notice. The RSI. It's sitting way up there at 87,891.
87. Okay, that's high.
Very high. For technical traders, an RSI above 80 usually signals that a stock is deeply, maybe even dangerously overbought right after a huge spike like this. So, while the news is fantastic, that RSI suggests there's a high probability of, a cooling off period or some kind of pullback coming soon.
Okay, good caution note there. Let's quantify this clinical validation speed. Run the numbers again. $5,000 hypothetical investment at COGT's previous close, $14.82 share.
Okay, at $14.82, that would get you about 337 shares. Total investment, $4,995.54.
And valuing those 337 shares at today's closing price of $32.46?
That position jumps to a total value of $10,930.42.
Right.
So our simulated paper profit here is an estimated $5,942.80. Still a spectacular one-day gain. Just showing how a successful phase 3 trial can act like an immediate wealth multiplier in biotech.
Right. So we've seen 2 stocks driven by these instant explosive catalysts. ROIV, this one's based in the UK.
Yeah, a bit different here.
Definitely a different dynamic. It's the largest of the 3 large mid-cap, $14.46 billion market cap, trading at $21.17. And they had a much, much calmer day today. Up a steady 2.67%, but still on pretty strong volume. 12.42 million shares.
Right. ROIV seems to represent more momentum and sustained speculation rather than a sudden shock. They actually reported Q2 2025 earnings today.
Oh, today? How'd that go?
Well, they showed a loss and actually slightly missed revenue estimates. So the positive price action today isn't really about today's earnings. It seems built on sustained momentum from earlier good news.
Oh, like what?
Specifically, the successful phase 3 Valor study results they announced back in September. That was for Biotech in dermatomyositis.
Okay, so the positive sentiment is lingering from that. Now, what's really fascinating here, and maybe frankly a bit alarming to a traditional investor, is the valuation based on their current sales. This is where the story gets really interesting, I think.
It really is. It's kind of the definition of a stock price purely on pipeline expectation. Look at the PS ratio price to sales. It's sitting at an astronomical 711.UN.
711?
711, yeah. To put that in context,
Yeah.
it means their current revenue is just microscopic compared to that $14.46 billion market cap. It's all anticipation. They posted an income loss, too, nearly $374 million.
So traditional metrics are just screaming overvalued.
They absolutely are. But, biotech investors, they're often looking 5, maybe 10 years down the road.
Right. So with a stock price so much on the future like this, what other factors should we be looking at?
Insider activity becomes really critical, especially when the valuation gets this stretched. Now, the sources note high insider ownership, 39.18%, which can be a good sign, showing skin in the game.
Okay.
However, we also see recurring selling transactions by key executives, including Eric Venker and Vivek Ramaswamy. And this selling was happening in the months leading up to today, September through November 2025.
So insiders are selling shares.
Systematically selling large blocks of shares at these high prices. We just have to report that impartially. It's a key data point you'd want to track if you're following management's confidence.
Okay, that's definitely something to note. Despite that really speculative valuation, though, their balance sheet liquidity must be rock solid to support this kind of structure, right?
It's flawless, honestly. Quick and current ratios are exceptional, 40.54. That reflects just enormous cash reserves compared to their short-term debts. And the debt equity, almost 0.02.
Wow, 40, okay.
Yeah, this is a company basically built on a massive war chest of cash. It lets them absorb these ongoing losses while they wait for their big drug candidates to hopefully reach the market.
Technically speaking, even with just a modest gain today, the stock is still looking pretty hot.
It is highly overbought. The RSI is 85.51, similar territory to COGT actually, signaling that technical caution is warranted.
85.
And what's interesting is the current price, $21.17, is almost exactly the same as the average analyst target price, which is $21.25.
Yeah, so maybe the market feels it's already hit its near-term expected value.
Could be. And like the others, it's way disconnected from historical averages, trading over 71% above its 200-day SMA.
Okay, let's wrap up with the paper math on this one. Quantify that steadier momentum. $5,000 invested at ROIV's previous close, $20.62.
Right. $5,000 at $20.62 would have netted you about 242 shares for $4,989.04.
And valuing those shares at today's close of $21.17.
The total portfolio value nudges up to $5,123.08. So the hypothetical bottom line here is a paper profit of $134.04.
Okay, $134. A modest return, accurately reflecting that 2.67% daily gain. A much lower risk, much lower reward day compared to the fireworks we saw with GLTO and COGT.
Exactly. Stark contrast. So if we kind of synthesize what we saw today in this high-volume corner of the biotech market, the dynamics are pretty clear, aren't they? You've got that instant explosive risk with GLTO and COGT. Major news creates overnight paper fortunes, totally ignoring the poor current financials because of the liquidity, the cash is strong.
Right.
Then you have ROIV. It's the slower moving giant, really built on that pipeline potential and sustained momentum. It's balancing those huge cash reserves against, well, an astronomical valuation and, importantly, that noticeable insider selling.
Yeah. So here's the key takeaway, I think, for you listening. The lesson is that in biotech, those traditional valuation metrics like PS, they often take a distant back seat to the pure, raw, immediate impact of clinical trial success or M&A news. That clinical validation or corporate action, that's the engine. That's what drives these high-risk, high-reward opportunities we quantified with the paper money simulation. The stock price isn't really measuring what they are right now. It's measuring what everyone hopes they could become.
Absolutely well put. And, that leads us to our final provocative thought for today. In a sector where successes like we saw with COGT and GLTO can generate 100% plus gains in a single day, the question isn't just about having successful trials.
When a company like ROIV commands a PS ratio of 711, completely untethered from current reality, how much future success, how many future drug approvals are already baked into that stock price? And maybe more importantly, can these companies actually capitalize on their breakthroughs through sales or smart financing without just excessively diluting or selling off the shareholder value they just created? That might be the ultimate question. What's the true cost of clinical success in this incredibly volatile space?